This is question number 5 on the practice homework 3 for module 3. So this is a question about how to categorize the items on a balance sheet and income statement into the operating and non-operating components, and then based on that calculate the return on net operating assets, and then based on the calculation of the return on equity, decompose the return on equity into the return on net operating assets and the non-operating return, and do some inference on that. So this is a very typical question in that category. So we are given the balance sheet and income statement for Costco. And again, we need to pay a particular attention to the rounding requirement, round the answer to the nearest whole number for part A. For part A is compute net operating profit after tax. So we know that this is based on the income statement. For 2018, assume that the combined federal and the state statutory tax rate is 22%. So in order to facilitate the calculation, let me first copy the numbers into the Excel. First, I copy the income statement, and then I copy the balance sheet. All right, so first part is only using the information from the income statement because it's asking us to calculate NOPAT. And we know that NOPAT, if you check my lecture slides, NOPAT is basically net operating profit before tax. Most of the time, this is simply the operating income minus the tax on operating profit. And tax on operating profit is further equal to tax expense plus the pre-tax net non-operating expense times the statutory tax rate. So this is relatively easy to calculate because this is relatively easy to categorize the components on the income statement into the operating versus the non-operating items. So operating income, basically all the items above the operating income are operation related. So we start, basically this is what we call the PB, net operating profit before tax, NOPBT. So this is basically the NOPBT. So let me mark this in red. And then go back to the formula. In addition to that, we also need the tax, right? Tax on operating profit. And tax on operating profit equals tax expense. And tax expense is basically given here. Tax expense is provision for income taxes. Let me mark this in yellow. And we also need pre-tax net non-operating expense. So pre-tax net non-operating expense basically are all the items below the operating income. So that includes the net interest expense. So let me mark this in green, and interest income and other net. So the sum of these two is basically the pre-tax net non-operating expense. And the statutory tax rate is provided, so we don't have to worry about that. So start from NOPBT. Again, this equals operating income. And then we need to deduct the tax on operating profit. So we start from tax expense. Right? Tax expense is basically the provision for income taxes here. And then we need to add more rows. And then we need the non-operating expense. Non-operating expense basically is the sum of these two, So then we can calculate the non-operating expense times statutory tax rate. So this is 38 times 22%. And then now we can calculate NOPAT, net operating profit after tax. So this is basically NOPBT minus the tax on operating profit. And tax of operating profit is basically the tax expense plus the non-operating expense times the statutory tax rate here. So go back to the formula, your tax expense time plus pre-tax net non-operating expense times the statutory tax rate. So that is my net NOPAT. And basically just need to copy the number back. And it's automatically rounded to the nearest whole number. But as I explained, if we're gonna use this number subsequently, we probably but we have to check the rounding requirement again. Oh, here it says do not round until final answer, so we don't have to round this in my Excel in terms of calculation. Here the rounding actually is for format only. So when you do that calculation based on this number, Excel is using a more precise number. If the more precise number has the decimal place, it will still keep the decimal place to do the subsequent calculations. But here, since it says do not round until the final answer, we don't have to worry about that part. Just to keep this as it is. And then compute net operating assets. So this is based on the balance sheet. So now we just need to do some work similar to what we have done for the income statement to the balance sheet. So we just first categorize each item on the balance sheet, except for the equity items, into the operating and the non-operating items. So cash and cash equivalents are not operation related. And short-term investments, they are investment activities, not operation activities. And receivables, they are operation related. So we mark this in red. And inventory, yes. And other current assets, yes. And net PPE, yes. And other assets, yes. So that's it for the asset side. And for the liability side, accounts payable, yes. Accrued salary and benefits, and yes. Accrued member rewards, and this is also part of the revenue generation, so we should also count this as part of the operating liabilities. And deferred membership fees, this is also part of the revenues for Costco, for company retainer as Costco, so we should also count this as operating liabilities. And other current liabilities, we also include this too. And long-term debt, this is financing related, so we don't count that. And other liabilities, we count this. So now with that, let me add some rows here. So because our calculation will be only based on the asset and the liability part of the balance sheet, so we don't need the equity part of the balance sheet. So I just add this. So let me first do the calculation for operating asset and then for operating liabilities, and then based on the difference between these two, we do the calculation for the net operating asset. So operating asset, this is simply adding up all the asset side items marked in red. So starting from this receivables and then mechanized inventories and other current assets, and then net PPE. I don't add the total current assets because this is the sum of all these current asset items, but part of those are not operating related. So and then other assets. So this is the total operating assets. And operating liabilities similarly is adding up all the liability items marked in red, starting from accounts payable. Sorry. And then accrued salaries and accrued members rewards and deferred membership fees and other current liabilities and other liabilities too. So now their difference determines the net operating asset. So what's cool about Excel is that we can actually choose the 3 cells and pull it to the right side, so the other year will be automatically calculated. So now I just need to copy the numbers back. So starting from 2018, so this is 2018 net operating assets, and the other one is the 2017 net operating asset. Part C, compute Costco's RNOA. So now with the NOA and NOPAT information, we can calculate RNOA. If you check my lecture slides, RNOA is simply defined to be net operating profit after tax divided by the average level of operating asset. So then we need to pay attention to the rounding requirement, round 2 decimal places. So since RNOA is in percentage term, so again, this means that we should probably keep 4 decimal places to do this calculation. And do not use NOPM. Can compute RNOA, net operating profit margin, NOPM, and net operating asset turnover. So net operating profit margin is defined to be sales divided by net operating profit after tax. And net operating asset turnover is defined to be the average level of the net operating asset divided by the NOPM is actually defined to be the NOPAT divided by sales, and NOAT is defined to be sales divided by the average level of the NOA. So RNOA, we just start from there. RNOA, let me add some more rows in order to give more space. And okay, so return on net operating asset, this is simply equal to NOPAT divided by the average level, right? The average level of these two NOA. But then if you don't add another parenthesis, Excel will do this 2 divisions rather than our intended to do the division on the denominator first and then the numerator divided by the whole thing. So those 2 are different. So that's why I need to add another layer of the parentheses in order to do that. So now this is 0 because I guess this is rounded to the integers. So I need to change the format and in percentage term and keep 2 decimal places. So this will give me 26.51. And then NOPM, this is defined to be net operating profit margin. This is the sales. Sorry, this is a NOPAT divided by sales. So sales is from the income statement. So we just go back to the income statement and get the total revenue. It's right here. So, and then we need also to format this cell to keep it in percentage term and keep two decimal places. So NOPM turns out to be a very small percentage number. So it's 2.27. And NOAT, net operating asset turnover, this is defined to be sales. Sales is right here, sales divided by the average level of this 2 NOA. So 2 NOA. Again, if you don't add a layer of parentheses, Excel will do the two divisions sequentially, but that's not what we intend. So I just add another layer of the division on the denominator, and then that should be the answer. So then we should also pay attention to the rounding requirement. Round to decimal place. That also means NOAT, but this time NOAT doesn't have the percentage sign. So I just keep two decimal place. So this turns out to be 11.70. 11.70. And part D, compute net non-operating obligations for 2018 and 2017. Confirm the relation, this. So NNO, that's also based on the balance sheet, right? It's based on the non-operating items on the balance sheet. So in other words, NNO for 2018 is based on, first we sum up all the liabilities which are non-operation related. In this case, it's just the long-term debt. I think there's only one item on the liability side of the balance sheet which is non-operation related, which is long-term debt in this case. And then we subtract the summation of all the asset side items which are not operation related. In this case, we have actually two items, which is cash and short-term investment. And this is so-called NNO, net non-operating obligations. So it's the difference between the summation of the non-operating liabilities and the summation of the non-operating asset. So then we can pull the cell to the other year and keep, I guess in this case, we don't have to keep any decimal place. If you go back and check the rounding requirement, that should be the case. Yeah, it should be the rounded to the no integer numbers. So this is going to be actually a negative number, negative 772. And the other year is going to be 794. 794. All right, so compute return on equity for 2018. So return on equity is defined to be net income. So it's going to be net income so ROE is defined to be the net income divided by, so this is going to be net income. So net income is from the income statement. So net income, but here we actually have two net income numbers, right? One is net income including the non-controlling interest. Another one is net income attributable to Costco. So which one should we use? In general, we calculate the ROE in terms of the parent company. So in that sense, we should use actually the last one here. And you can also find out that particular note from the PowerPoint lecture slides. When we deal with non-controlling interest, when we want to calculate the ROE, then we generally calculate ROE from the parent company's perspective. So we don't include the non-controlling interest. So in that regard, we should use the net income attributable to Costco only. And then the denominator is the average level of the equity, right? So equity is from the balance sheet. So for the equity, we also have two numbers. One is the total equity, another one is the total Costco stockholders' equity. Since the numerator we just used the income attributable to Costco, so the denominator to be consistent, we should also only use the total Costco shareholders' equity, this number. But then we need to calculate the average level of the 2 years, and then divided by 2. Again, in order to avoid the subsequential deviation problem, I need to add the parentheses. So ROE. So again, check the rounding requirement. ROE, we need to first, this is the percentage term, and then round your answers to 2 decimal places, and then do not round until the final step. And that's what we did basically. So the numbers and percentage and 26.59. 26.59. So infer the non-operating return component of ROE for 2018. Use answers from above to calculate. Round your answer to 2 decimal places. So this is also in percentage term. So because ROE equals the operating return plus the non-operating return. And the operating return basically is the return on non-operating asset, not non-operating, return on net operating asset. And hence, the non-operating return basically is the difference between ROE and this RNOA. So we can just do the let me add one more layer, non-operating return. This simply equals ROE minus RNOA. So this gives me 0.07%. Finally, comment on the difference between ROE and RNOA. In this case, ROE is slightly larger than RNOA, right? That's the reason why the non-operating return turns out to be a positive number. So what does that suggest? Remember, the hassle of decomposing ROE into the operating part, operating return, and the non-operating return is because we want to say that if you check my lecture slides, the reason we do that is because so let's go to the reason we do that is because if you look at the ROE decomposition here, the liabilities here is sum of two parts, which is the borrowed money, which is what we generally call the leverage, and then the operating liabilities. So that's why we want to, because these two liabilities, they may have very different implications, right? Because this part of this is like a borrowed money from a banks or issued corporate debt, corporate bond to the public, or notes payable, things like that. But these operating liabilities are generally provided by entities such as suppliers. So these two are very different, has very different characteristics. And that's the reason we do the decomposition of the ROE into the operating part and the non-operating part of the returns. So this RNOA, return on net operating asset, is generally dealing with these operating liabilities. And the non-operating return is basically coming from this borrowed money. So the borrowed money has cost. So now only if uh, the profit earned, sort of the profit earned from borrowed money is higher than its cost, then the return can be positive. In this case, it is positive, and and so we can infer that the profit from earning based on that borrowed money turns out to be larger than the cost of. So we just look for the answer which matches that analysis. Implies the cost of equity has grown faster than its RNOA. That's not what we are looking for. Costco has taken on too much financial leverage, and that's not also not what this implies. All right, this means the profit equal or larger than the cost. And Costco is able to borrow money to fund operating assets that yield a return greater than its cost of debt. And this is exactly what we are looking for. So now let's just check our answer. All right, so seems that we're good to go.